So my name is Mark Taylor. I'm an investment director at Beringier. And actually what I'm going to introduce is growth finance, and that's our lending activity rather than our equity investing. But firstly, what was the rationale? Well, historically, you'll know VCT cash was placed on deposit until suitable equity investments are identified. And of course, we hope that portfolio companies will be acquired and the cash returned to the VCT, which could be at short notice. And because of this, we may sit with significant cash at certain points in time. I'll not surprise you, in the current low interest rate environment, returns from cash deposits are less than 0.5%. Beringier recognised that by establishing a growth finance business that is looking for lending opportunities in addition to our equity investing, we could generate higher returns from the proportion of the ProVen portfolio that was not yet in qualifying equity investments. Growth finance then looks to provide secured loans with additional upside from performance-based exit fees. That is, if the company is sold above an agreed value, ProVen will receive an extra fee. Growth finance is an increasingly popular way in the market for growing companies to expand using debt alongside their equity finance. Well, what's our experience? Well, I joined Beringier in August 2013 to head up this new initiative. I have some 30 years of lending experience, starting at Barclays in the 80s and with Kleinwort Benson in the 90s. And then the last 18 years have been exclusively focused on venture and growth finance. I've arranged more than 160 million in secured loans to over 60 companies. My colleague Hilary Weatherstone, who details you can see on our website, joined us in May 2014. She has more than 20 years leasing and lending experience, having worked with me at Kleinworts, and then as a director at Barclays and then at Lloyds. We also work with very experienced external lawyers with some 16 years of shared experience of the venture and growth finance market. And of course, we're supported by our Beringier colleagues, our investment committee of Malcolm, Stuart and Trevor, who you've heard from already, our analysts and our finance and marketing team. I then just wanted to turn to the growth finance portfolio. These are the three companies that we added to the portfolio last year, which you may have seen in the newsletter. And they were nicely spread out in April, in August, and in December. The first company, Pirius, a personalisation software provider, we provided 1.2 million. The net book value now is 600,000. Siloxica, a provider to the financial sector of ultra-low latency trading solutions, 1.5 million, the net book value now below 1 million. And thirdly, SE Pharma, in December 14, a specialty pharmaceutical company, 4.75 million, the net book value now is 4.4 million. Actually, the one that you'll probably have used without knowing is Pirius, as they're behind the website of companies such as Homebase, Topshop, The White Company, British Home Stores, and Charles Tyrwhitt. And I have to say Tyrwhitt correctly because Nick Wheeler, the founder of that company, sits on the board of Pirius with me. So, for example, if you go to the Charles Tyrwhitt website and you like a blue shirt, it might suggest the tie that would match it, or a blue shirt or a red shirt. The slides show the actual returns in pounds. And you can see the interest that we earn and the further fees. And I think it's useful to see the actual sort of quantum of the amount that we can generate. For example, the total interest for SE Pharma over the full 48 months of the facility is over £1 million. But I can also express that in terms of a yield for ProVen. It'll be at least 8%, and it will rise to more than 12% with performance fees. I think one of the important points is of the 7.5 million that we lent last year, over 1.5 million has already been returned, and that's 1.5 million available for equity investment or further growth finance transactions. So what of this year? Well, this year's been more like London buses. Nothing at all, then they all come at once. We're currently working on 3 transactions to close before the year end, of which we're already in exclusivity with 2 of them. The slide only tells you a little bit about them because we're in a non-disclosure agreement with each one. But you can see that if we complete all three, it's another 6.5 million added to the portfolio. My final slide is to introduce something different. For some time now, we've been asked by shareholders and IFAs if we have an IHT product. You might think it's less of an issue now that the Conservatives announced an increase in the IHT limit for the family home this year, but the changes in the recent July budget are limited, as they're phased over 5 years, apply only to individuals with direct descendants, so children or grandchildren, and the relief is tapered away for estates with a net value of more than 2 million, disappearing altogether for estates of more than 2.35 million. We will be looking to raise up to 20 million for a new company called ProVen Legacy plc to be launched this winter. The focus will be on providing secured loans to SMEs with the aim that investors in the company will be able to claim business property relief against their IHT liability. We'll use our contacts within the debt origination market to source suitable opportunities, and we'll look to expand our resources at Beringia as the new business develops. Thank you.